Hey, it's Mack with PriceActionTradingSystem.com, and it is Tuesday. It is July 19th. This will be our chart lesson for the day, and another real tight range day. We didn't really break out and we didn't even go far when we did until well after 2 o'clock. So I wouldn't even consider that as part of a trade. Of course, if you'd have caught any of these down here, uh, particularly this one, you probably wouldn't have this one, but you would have had some runners and you could have ridden that all the way into the close, basically. So again, I love these failed breaks, just like this one that broke higher, and really even this one, you can ride them all the way down to the lows. They usually turn out to be a lot of times the high or low of the day. This did turn out to be pretty much the low of the day. Didn't quite break the overnight low, but from 8:30 on, that was the low of the day. And if you caught that, you could have ridden it up. So I love those. And this is just a range day. And generally, when it's range, when prices are flipping back and forth to both sides of the EMA, that's usually a good signal that it's a range day. And you can trade it both ways, really. Generally, your best trades are going to be your key entry points, which is off the highs or off the lows. And it's as simple as that. And I love these kind of days. They're very predictable. Just look, if you'd have sold any of these highs, all of them would have made money. If you'd have bought any of these lows, all of them would have made money. Pretty simple. So that's the key to range days. You just have to be able to recognize them, and you have to be able to trust that prices are going to reverse, and even if they break through, they're probably going to fail in reverse. So you just wait for the reversal setup, and generally it's going to be a good one. So anyway, let's talk about the trades. First trade I saw when I came in, we were working up here. There's a channel working higher, and notice we pulled back. We shot through the EMA, we pulled back, and we get a nice reversal. At that point, I was hoping we maybe were going for the overnight lows, but that's a nice reversal bar, very bullish. It was only good for a scalp, unfortunately. And then you pull back, you get a first entry, pull back second entry. This is a nice second entry long when you're looking for a retest of the high. However, the signal bar is not very good. It's two dojis in a row, and they're stacked up side by side. There's three bars stacked up. At least one of them's a doji, so that can be concerning. It is a double bottom coming off a low, and we are looking for a retest of the high. So there's some reasons to like this trade. It would have been a nice, easy trade, but it's aggressive for the reasons I talked about, not being a great signal bar. So, and the fact that they're stacked up there and it's congestion. So, but we push higher, we make a new high, and now you're looking for prices to pull back. Look at that big bearish reversal bar. It opened way up here and closes on this very low. You can just enter that with a stop, figuring it's going to at least go to the EMA, but hopefully all the way to the other side, which it does. And it did pull back, so you really didn't get any runners on that one. There's a second entry short there, but again, not a very good signal bar. But when you get this little higher low here, notice there's a new low, pull back first entry, pull back second entry. I would have liked it better if it broke higher, but this is still good enough. It confirms the trend line, and it's a bearish bar, and you're looking for prices to probably test at least these lows and maybe the overnight lows. So nice, easy trade. Um, we get a double bottom here and bounce, but you hadn't had enough support previously to really trust that without a break of this yet, because you're probably going to retest this low, and notice it would have worked, but notice it breaks it, pushes down, and then you get the double test rule and you get another bounce. So now you've got three bounces off that low. There's the original low. You tested it twice. Nice bullish reversal bar. It's right into the EMA, but I think with the double test and the bounce a third time and prices back and forth across the EMA, I think you're more than safe to take that one. Looking for it to go to the other side. Of course, the other side, the prices drop a little bit lower here. But notice that trend working up. You get a break, attempted a new high, and so you get a second entry short there, counting off this low. It's a fairly bearish bar, but you don't have a new high yet. So you may want to take that one. It's aggressive, but I think you're better off to wait. It would have worked, and you see what happens. It does push up and get the new high, and then of course you get another big bearish reversal bar, another failed break higher. Look how bearish that is. Just go short there. Quick, easy move. It pulls back, so no runners, and then it pulls back and gives you a failed second entry long, and then another big bearish bar, and it closes right back inside that line. Just go short right there, and you're looking for it to go the other side. It drops down there in just a couple of bars, actually. So this was a quick, easy move, and that's where I would have been looking to exit if we found any support there at all. The only way I would have hung in with that is if it shoots on through, and it doesn't. So you exit a tick or so off the bottom, and you get basically all you can get out of that. It was hard to know if this was a break or if maybe the trend was going to be out here. So I'm not real sure on that one. It looks like it's probably two tests of it here. But with all that congestion and going sideways, you definitely don't go short right into those lows. Then you get the trap here and the failed second entry long. And then you can go short. And same thing here. You get a second entry, but it's hard to know if you've had your break and new low. You figure prices will at least go back to the EMA probably and bounce off these lows. So there's some reasons to be interested in this, and I do believe that this was probably the right trend line in the end. But you really wouldn't know that for certain until prices went higher. But here's your failed second entry short. You got a double bottom, so that's a new low, pull back first entry, pull back second entry. And that's a nice bearish bar. But hopefully you didn't get fooled short there. You don't have enough room really to get out before those lows. You got three bars stacked up. One of them's a doji. And if you did enter, it would have failed. So just reverse when it exits. But I like definitely going long there on that trap. I was hoping it would go to the other side, and you expect it to, but it doesn't. But it doesn't matter because you still get your scalp, and that's why we scalp out, because sometimes it doesn't do what we think it's going to do. I don't think you really want to go short here. It is a second entry short, a very small bar there with low risk, but you're expecting prices to test these highs again. So, I mean, you could probably give that one an aggressive green bar, but it's definitely aggressive, and I don't know if I would take it or not. So, but I'll mark it anyway. But when it shoots straight down and bounces here, look at that nice reversal bar, closes right back inside there. It's not real far away from the EMA, but this support's held all day long, and now you've broke lower and it's failed and fought its way all the way back up and closes on its high. I like going long there. And then this is one you can add on. And this is really usually you're better off to wait on that second retest like that. Just like here, you didn't take the first one, you wait on the second one. Here you waited on the double test on that one, but because you didn't have a whole lot of information to show you that this was strong support. But now you've bounced off this level how many times now? So I like adding on with that bullish bar. Your safety stop still has to go below this bar, but that's not a very good signal bar. But when this one closes inside it with a higher high, right on its high, I like going long there. And I like adding on if you get a chance to add on. So you'd have two sets going there. And you could really ride them all the way. This is that chance to catch the low of the day. And so it takes off. There's another pullback here, but you're just going sideways. Look at the dojis in there. 1, 2, 3, 4, 5 bars. Don't go long there. And you see what would have happened if you had, and it still would have gone higher, but you would have got stopped out first. So yeah, that was it. Again, not a lot of trades today. It's just the volume seems to be way down. Volatility is definitely way down. But again, on these range days, the way you trade them is you buy the lows and you sell the highs. Just wait till you get an established low, and when prices bounce off of it or you get a failed break lower, look for an opportunity to enter. Wait on the good signal bars in most cases, and you'll probably be okay. Just You know, you see by waiting on some of these, we missed a chance. So if you want to be real aggressive, you just buy and sell them all as soon as you get a setup and see what happens. But you'll still have more winners than losers. But I like waiting on, based on the way we just went through it and described it, waiting on the right setup and, you know, playing it by the rules the way we're supposed to. So, yeah, not much else we can say about today. Actually, one other thing, when it's going sideways like this, there will be some setups that form in the middle here. But generally, those are where you'll get tripped up. The safer plays are buying the lows of support and selling the highs of resistance. And you can see if you bought any of these lows, you would have made money. And if you sold any of these highs, you would have made money. You would have got at least a scalp out of them. And that's a safe play. So even though I've marked some of them in green, they still would have worked. So keep that in mind and understand that, and just look how prices are swinging back and forth. And notice where the overnight high is and the overnight low. We never got outside of that the entire day. Even at the close on this rally, we didn't get outside of those highs. That's a sure range day, and the fact that prices are flipping back and forth consistently above and below the EMA, that's a range day. So learn to recognize that. Study your charts. I probably don't say this enough. I'll say it again today. Just remember that you don't get better by coming and trading every day and then closing up and leaving. You get better by coming in and trading every day as much as you can and then studying your trades and your chart at the end of the day. That's what makes you a better trader. So don't lose sight of that, because that's the key to this thing. And, you know, being in a trading room and being on Skype, I'm not against those things, but they don't really help. It's just a waste of your time, a waste of your money. In my opinion, what helps is you learning to spot it on your own by studying your chart every day. And each day you'll pick up a little something else, but there's a lot to pick up, so it takes a while. There's so many nuances, and it takes a long. What really takes a long time is to see every type of day you will see, because what will happen, and this will probably sound familiar to you. You get to seeing this every day, and then you start to expect it. And as soon as you kind of figure it out and you start to feel comfortable with it, it changes. It'll start trending, and then you'll get a trend every day, and you're trying to range trade, and it just keeps going higher, it keeps going lower, and finally you'll catch on to that, and then it'll change to a different kind of day. And it takes a year or two to see every kind of day and to get familiar with them enough, to see them enough to get familiar with them. So this is just a long process, and people come into it with the wrong expectations. And there's no magic bullet, there's no holy grail, but this chart right here in front of you speaks a language. And when you learn to understand that language and it makes sense to you, that's when you will start to have success. So, but most people come in here and, you know, especially on a day like this, I'll get questions like, every time I've sold, which they're selling down here, I should have bought. And then I start buying up here and I should have sold. And just, you know, how do you know which way to go? Well, there's no trend. It's not trending anywhere. It's just bouncing around between a support and resistance. And the only way to trade that is to buy the support and sell the resistance. So keep that in mind. So I'm going to wrap it up. We'll be back again to do it tomorrow. This is Matt with PriceActionTradingSystem.com, and we'll see you next time.